Welcome to today's Canary report, on a day that delivered the classic case of market indecision. The indices are basically flat, while real money is rotating hard between tech and safe havens. Investors are clearly uncomfortable holding concentrated positions in mega-cap technology as earnings season closes out. Let's see what our canaries are telling us about where smart capital is flowing right now. The spec leader split tells a story of tactical rotation, rather than broad euphoria or panic. IRKK Pop 2, 3%. Those biotech and innovation names that were beaten down in the spring are getting some technical relief as risk appetite stabilizes, while XBI matched that with a solid 2.22% gain. SPHB's 3, 45% drop is more interesting than it looks at first glance. High-yield corporate bonds are being trimmed as traders anticipate the Fed's structural inflation fight could tighten credit conditions sooner than expected. The consumer discretionary XLY barely edged up 0.57%, showing that retail demand remains steady but not generating enthusiasm. Credit markets are whispering about tightening conditions without screaming. All three yield ETFs slipped, HIGH and HYG both down fractionally, while HYGW took a steeper 0.41% hit. The spread compression we saw last week is giving way to cautious positioning as institutional investors recalibrate their duration exposure. What's notable is that yields are falling alongside prices, which means the market isn't pricing in a sudden credit crisis. It's pricing in slower growth and potentially tighter monetary policy. The Bali bull run reference in today's headlines hints at BlackRock's 7.7% yield strategy, capturing attention as investors search for income alternatives beyond traditional bonds. Here's the interesting contradiction. VIX dropped a full 2.54 points to 1841, yet all three volatility ETFs are up. UVXY 0.76 and VIXY 0.77. This pattern signals two things happening simultaneously. First, the underlying fear metric is receding as we move past last week's geopolitical spike. Second, traders are hedging or taking contrarian positions, some buying volatility exposure while the broader market remains calm. The tech rotation into AI infrastructure plays, that's zero. 47% fund owns data centers headline, suggests money isn't fleeing risk entirely. It's just moving from headline-grabbing names to more foundational positions that will benefit regardless of who wins the generative AI arms race. The engine is showing what you'd expect after a long spring rally, hardware and infrastructure taking center stage as software hype cycles naturally rotate. SMH hammered 29% as chipmakers face margin pressure from both higher manufacturing costs and slower enterprise adoption rates. IWM 0, 47% gain against the broader market, suggests small caps are finding support at these levels, which is encouraging for credit quality across the economy. The regional banking KRE ticked up 0.43%, while industrials IYT dipped 0.43%. A neutral split that tells us manufacturing activity isn't accelerating or decelerating dramatically. Gold led all safe havens with a strong 141% move to $4,096, 30. That's the most significant single-day gain we've seen in weeks, and it tracks directly to geopolitical uncertainty around the Middle East and tariff-related inflation concerns, GLD outperforming TLT, which was essentially flat at plus 0.1, shows capital is favoring hard assets over long-duration bonds right now. XLP consumer staples gained 0.63%, providing defensive coverage as earnings season closes, while bonds modest 0.6% move suggests bond traders are waiting for clearer policy signals before committing to duration. The dollar staying flat at 101.37 means there's no broad currency-driven flight. This is more tactical positioning than structural reallocation. We're seeing a sophisticated rotation play unfold rather than a binary risk-on, risk-off day. The Tech X-FANG weakness, Nasdaq down 0, 24 mils, Combined with gold strength and volatility, ETF gains suggests investors are compressing their technology exposure while maintaining some defensive coverage. The spec leader split, ARKK DEX-BI up, SPHB down, indicates smart money is betting that the AI infrastructure cycle has more runway than pure software applications. Credit markets are quietly adjusting expectations for a slightly tighter policy environment as the Fed's 3-3 inflation framework takes shape. That's your Canary report for today. The market is digesting what might be the final round of megacap tech earnings before we step into July, and the Canaries suggest patience rather than position changes. Just careful rotation. Stay alert on any Fed commentary coming out tomorrow week, as that'll probably set the tone for the second half of Q2 trading. We'll see you tomorrow with another market diagnosis.